Federal government finalizes steps towards economic roadmap for industry expansion, technological innovation, and economic resilience. Trump slams fresh tariffs on aluminium and steel imports in latest trade war flare-up. Plus, markets around the world respond Tuesday to fresh tariffs by U.S. President Donald Trump as oil climbs on supply worries. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Nneka Oko, your guide. Welcome to the program. The federal government is finalizing plans to enable the implementation of a growth plan that will ensure industrial expansion, technological innovation, and economic resilience. This is as the Ministry of Industry, Trade and Investment, alongside CEOs of the 20 agencies under the ministry, met to brainstorm way forward. With the theme, Accelerating Diversification to Rebuild Prosperity, stakeholders believe it is time to move Nigeria from an import-dependent economy to an innovation-driven industrial hub.
That's teamwork, innovation, and chart a pathway to excellence.
Looking at 2025 and beyond, I think we are charged with something that is urgent and strategic, a mission that calls on us in terms of accelerating our industrialization to rebuild the prosperity that I think that we all need as a country.
To our private sector stakeholders, impact means businesses operating in Nigeria would find it progressively easier to start and grow their businesses and their return on investments for their owners. So the road ahead, as we begin the year, we are committed to delivering measurable impact with renewed energy and determination.
Now, U.S. President Donald Trump substantially raised tariffs on steel and aluminium imports on Monday to a flat 25% in a move he hopes will aid the struggling industries in the United States, but which also risks sparking a multi-front trade war. Trump signed proclamations raising the U.S. tariff rate on aluminium to 25% from his previous 10% rate and eliminating country exemptions and quota deals, as well as hundreds of thousands of product-specific tariff exclusions for both metals. A White House official confirmed to Reuters that the measures would take effect on March 4. The tariffs will apply to millions of tons of steel and aluminium imports from Canada, Brazil, Mexico, South Korea, and other countries that had been entering the U.S. duty-free under the carve-out. Well, President Trump's tariffs and the trade war sets the tone for our discussion today. Shortly after returning to the White House, Trump slammed 10% duties on all Chinese imports. China responded with 15% duties on coal and liquefied natural gas products and a 10% tariff on crude oil, agricultural machinery, and large engine cars imported from the U.S. Now, the latest is this 25% levy on aluminium and steel imported into the United States. And China has also retaliated in what has been described as a trade war. What's truly at stake? We are being joined by Dr. Ken Okoha, the Director General of the West African Institute for Trade and Agricultural Development, WAITAD, and President of the National Association of Nigerian Traders. He joins us via Zoom from Accra, Ghana. With his extensive experience in trade policy, agricultural development, and the realities faced by Nigerian and West African traders, Dr. Okoha will shed light on escalating trade tensions and how they affect both global markets and local economies. Hello, Dr. Okoha. Thank you for joining us.
Thank you very much. Good morning.
All right. Could you start by outlining concerns, if any, that Nigeria should have given the ongoing tariff exchanges by U.S. and China?
All right. Thank you very much. I think the concern are many, but maybe I should touch on a few that go straight to the subject matter. I'm sure we all know that the non-oil exports from Nigeria, and particularly to China and the US, is growing as we speak. In fact, from statistics, we have non-oil exports that rose from Nigeria from 1.17 billion in 2016 to 3.16 billion in 2018, and dropped slightly, and went to again in 2023 to 4.5 billion dollars, and which also had a 6.3 decline from the previous 4.8 billion in 2022, which was the previous year. Now, to this particular year, we have seen from the Nigerian Export Promotion Council that the non-oil exports from Nigeria has grown higher than expected. But what the trade war would bring on the table now is that there will be a kind of dwindling from that kind of export orientation of non-oil particularly. And looking from the fact that, Nigeria has a lot of dependence on oil sector exports. What we'll see is that raw material inputs, which are majorly the exports that are coming from Nigeria to all of these other grown countries, whether it is China or US or Canada, will begin to dwindle. Why is it so? It is because their own exports, their own productivity, their own manufacture is also dwindling. Therefore, our exports from this side, which provides inputs to their economies, will also begin to dwindle. Number two is that we hope and pray that that retaliation does not escalate to many other value chains beyond the current value chain of steel and aluminium. And if that happens, again, there will be some kind of crash. Number three is that the harsh implications on SMEs and the services sector. I'm sure you know that the banks are the hosts of trade finance, all of the export trade. Now, it will also affect them because they are the ones, holding the funds. They are the ones hosting the funds as well. The transport sector, the logistics sector are also going to have some shock. Now, other impacts is also, has to do with monetary policy, in the sense that our exports brings in a lot of, if you like, foreign currency. So, and Nigeria has been battling with foreign currency for a long time now. And you can see the dollar-naira parity and how it is struggling, the country has been struggling to get all of these, checks. But if there are no exports, the value of the dollar that will be coming in will begin to dwindle again. And that will bring some shock on that particular monetary side. One other challenge I must talk about here is that, with what is happening, there is going to be the challenge of influx of goods from both parties. I mean, from other parties as well, beyond China, US, and then moving to Canada and other. Why? Because they are going to start looking for market spaces where they can also, in this case now, in this case, extend their, export markets. And if that happens, we will also have some kind of shocks within that line of, thinking. These are some of the things that will be happening. And this should show concern for Nigeria. Thank you.
All right. Market experts also warn that a global trade war will be inflationary for the U.S. economy. What do you think are the potential consequences for American consumers?
Well, you can see, for instance, I give you statistics. About 270 companies of Chinese origin are producing in the U.S. market. And in this particular sector, this aluminum and steel sector, what will happen is that their own, the employment over there, in fact, the Asian U.S. Chamber has noted that over 1 million employment will be dropped. That job will be dropped. Moreover, the welfare package, which comes from exports, will also have shocks. Number 3 is that there will be a kind of multiplication of dispute settlements, and all of that will be coming up at the multilateral level. And this is not what anybody would pray for. And once it begins to happen, it also begins to touch every other country. In particular, the small countries, which are third parties. These are reasons why this must be avoided. If there is anything that could be done, the retaliation measures is not the best for trade, it's not the best for growth. And if care is not taken, the world is going to notice a very serious global economic shock arising from all of this. Not only the US, not only the Chinese, not only Canada as you speak, not only Mexico, but particularly the small countries. That's where I have my fear. The little countries. Why? Because these little countries are domiciled, are where the SMEs are domiciled, that are adjunct to export of raw materials to these countries that are producing and exporting to it in a larger scale. So that's the fear.
All right. So what's your assessment of the dynamics at play in this potential trade war? Who stands to gain and who stands to lose?
Everybody's a loser. I must tell you, a lot of people have said, America would, gain. There's nothing wrong in, America having the policy of me first. That's not, diplomacy goes that way. But I think that perhaps the nature of Mr. Trump is that he will just shake the table, and then people will be forced to come to the table for negotiations. And that's the way sometimes to go about this. But if the negotiations does not happen, what's the plan B? What's the plan B? That's my fear. So there will be market phobia everywhere, tensions everywhere. And for small countries that rely, I must say this again, for small countries in West Africa, for instance, that rely on imports from the US, from China, and all of that, it's going to be a big problem. Big problem. So look at the automotive sector that we are trying to develop is also going to have some problem because steel is involved, aluminum is involved.
So, Doc, what policy measures? What policy measures would you recommend to both national governments and regional bodies to mitigate the negative impacts of these trade disputes on local economies?
All right. So it's important for us to begin to think of a kind of public public-private dialogue right from the national levels. I saw that, within the Ministry of Trade, Investment, Industrial, Investment, there have been some level of meetings among, the parastatals. But I want to say that it's important also to bring in the private sector into such meetings, into such dialogues, so that you shave their hairs in their presence, and also tap from what they know, the practical essence of, their trade, and very key to that. Now, number two is that we must begin to think deeply now on practicalizing this diversification, economic diversification, very key. Now, it's important also to look at our tentacles within, from within. Look at the ECOWAS market, for instance. 450 million people, that's not a small market. Can we begin to look inwards in that perspective? Can we also begin to look at the African Continental Free Trade Agreement? Look at 1.2 billion market share, the population there, waiting for us. So we shouldn't always think of getting, the dollar, share out there. There is this market that is yearning within us there. Look at the SEPA and Naira, the parity. And of course, I think that we should begin to think of what can be done. Shore up the economy, invest more in the industrial sector and infrastructure, trade infrastructure particularly. And there should also be a reduction in the volume and target given to customs on import duties and all of that. Thank you.
All right. Thank you very much, Dr. Ken Okoha, Director General of the West African Institute for Trade and Agricultural Development and President of the National Association of Nigerian Traders. It was a pleasure having you on the program.
Thank you very much.
All right, moving on, the federal government through the Ministry of Finance Incorporated MOFI has launched the 100 billion Naira Series 2 offering under the MOFI Real Estate Investment Fund. The initiative, designed to address the country's critical housing deficit, prioritizes affordable mortgage financing with repayment tenors of up to 25 years and interest rates targeted at 11 to 12%, which is lower than prevailing commercial rates. At the official launch of the fund, Minister of Finance and Coordinating Minister of the Economy, Wale Edun, emphasized the importance of private sector involvement in expanding the housing sector, as the target is to build 1 million new homes a year.
The 100 billion Naira issuance and fundraising, which will complete a 250 billion Naira amount, which will then immediately be put to use, providing low interest.
What we're doing here is to create an instrument that makes investors comfortable to channel a lot more resources into the housing sector so we can begin to bridge that housing gap.
We move to the commodities market now, where oil prices extended gains this Tuesday after a report showed Russian oil production fell short of quota and on fears of more supply disruptions. But gains were limited by worries that escalating trade tariffs could dampen global economic growth. Brent crude futures were up 24 cents at $76.11 a barrel in early trade, while U.S. West Texas Intermediate crude rose 19 cents to $72.51. Both contracts posted gains of near 2% in the prior session after 3 weekly losses in a row. Still on commodities, gold prices catapulted to a record high on Tuesday as investors flocked to the safe haven asset after U.S. President Donald Trump imposed fresh 25% tariffs on steel and aluminum imports. Let's see prices on the global market. And on the currency market, the dollar gained while others slipped Monday on tariff threats. How is the naira trading against the dollar and other currencies? Let's see. The Nigerian stock markets ended Monday's trading session in negative territory as the all-share index ASI declined to 105,891.33 points, reflecting a bearish performance. Market activity remained significant with a total volume of 567.29 million stocks traded in 17,843 deals valued at 10.41 billion naira. Despite the downturn, the total equity capitalization stood at 66.07 trillion naira, indicating sustained market depth. The negative close highlights prevailing investor caution, with analysts closely monitoring market trends for possible recovery in the coming sessions. Now, shares at major listed steel makers in top producer China slid on Tuesday on fresh tariffs by U.S. President Donald Trump. Maria Zachary has a summary of global market activities. Hello, Maria.
Hello, Neka. International market space still assessing the impact of tariffs on steel and aluminium by U.S. President announced yesterday. European markets are heading for a mixed open this morning. We have the DAX at open at 21,911 points. We have FTSE already open at 0.77% and the CAC is to open at 8,006 basis points also. Asia markets traded mixed Tuesday as investors continue to assess U.S. President Donald Trump's tariff campaign, while Japan markets were closed for a holiday. The Nikkei 225 gained 0.04%. We have Shanghai Composite down at 0.12%. The Hang Seng Index led losses in the region at 0.70%. U.S. stock futures trade lower as investors look toward key inflation reports due later in the week. The Dow is in green at 0.19%. The S&P 500 also down at 0.28%. We have the Nasdaq Composite also low at 0.35%. Africa markets bullish this morning. South Africa JSE Top 40 dipped 0.40% right there. We have Namibia All-Share Index, which was marginal. That's for Global Update today. I am Maria Adozakari. It's back to Ineka.
Thank you, Maria. The African Development Bank, AFDB, has reaffirmed its commitment to transforming Africa's agricultural sector with as much as $3 billion investment in special agro-industrial processing zones across more than 11 countries on the continent. AFDB President Dr. Akinwumi Adesina said the initiative is part of the bank's broader strategy to drive agricultural industrialization and enhance food security. Adesina highlighted the continent's critical role in global food production. He also outlined the bank's High 55 program, which focuses on lighting up Africa, feeding Africa, industrializing Africa, integrating Africa, and improving the quality of life for Africans. Well, this is where we end this edition of Business Express. We value your feedback, so keep the comments, observations, and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns on Wednesday at 3 p.m. I am Neka Oko.